Bitcoin's journey to surpass its previous all-time highs often seems protracted and challenging. However, it's crucial to understand the context of Bitcoin's market cycles and the unique dynamics at play. Although it may feel slow, it's important to remember that we are only a few months past the latest Bitcoin halving event, a significant milestone in Bitcoin's cyclical nature. The Bitcoin halving event, occurring approximately every 4 years, reduces the block reward for miners by half, effectively decreasing the rate at which new Bitcoins are introduced into circulation. This reduction in supply, against a backdrop of a constant or increasing demand, has historically led to substantial price increases. Each halving initiates a new cycle, typically characterized by a significant bull market. The current cycle is no exception, and has already seen Bitcoin surpass the previous cycle's all-time highs ahead of the expected schedule, emphasizing the uniqueness of this cycle. At present, Bitcoin's price behavior suggests a period of potential energy buildup, akin to a coiled spring ready to release. Since mid-March, market volatility has been on a decline, reaching levels that have historically preceded significant price movements. This decrease in volatility often signals a consolidation phase where market participants are waiting for a decisive breakout. This historical pattern suggests that periods of low volatility often culminate in a sharp price movement, either upward or downward, depending on the prevailing market sentiment and external factors. After several months of apathy and sideways trading, there are early signs of renewed speculative activity on the Bitcoin market. This resurgence often acts as a harbinger for broader market movements. Speculative activity tends to pick up when early adopters and market participants start positioning themselves in anticipation for future gains. This initial wave of speculation can create a momentum effect, attracting more participants and driving prices higher. One key indicator supporting this observation is the short-term holder sell-side risk ratio, which has been rapidly decreasing. This decline suggests that the market is exhausting its supply of sellers. When the number of sellers diminishes, the buying pressure can push prices higher. This scenario indicates that the market is approaching an equilibrium point, which often precedes significant price movements. Volatility is a critical factor in Bitcoin's price dynamics. Low volatility periods, like the one currently observed, tend to indicate a market in a consolidation phase. During this phase, price moves within a narrow range as traders and investors wait for a clear signal to move. This coiling effect, where the price movements become increasingly narrow, builds up potential energy. Once a breakout occurs, this build-up energy is released, leading to a sharp and decisive price movement. Historically, such breakouts after low volatility periods have led to significant upward price trends in the Bitcoin market. The Bollinger Bands are compressed, indicating an imminent big price move. The short-term holder sell-side risk ratio is rapidly dropping, suggesting that the market is running out of sellers. When sellers are exhausted, prices tend to rise. This indicator showcases an equilibrium is near, signaling an upcoming major price move. According to Glassnode analysts, both long and short-term holders have experienced a reset in their sell-side risk ratios, suggesting a new equilibrium. This indicates the market is ready to move, and we should expect increased volatility in the near future. Looking at the bigger macroeconomic picture, there's a lot happening that could influence Bitcoin's next big move. To understand the direction of this move, we need to step back from on-chain data and consider broader financial conditions. Stock and crypto prices are influenced by broader economic factors, particularly risk-on and risk-off attitudes. This is shaped by how easily money is available to potential investors, interest rates, and central bank policies regarding money supply. Currently, central banks around the world are starting to cut interest rates. Brazil and Mexico have already started, and the European Central Bank, England, and Canada have announced cuts. The U.S. Federal Reserve will likely follow, leading to increased global liquidity. This is good news for the availability of money in the market, which is in turn favorable for risk assets like crypto. The Global Liquidity Index, which combines the balance sheets of central banks, essentially their money printing activities, shows a perfect wedge pattern forming. This suggests a breakout in the imminent next few months. Risk assets have been anticipating this increase in liquidity, leading to what some analysts like Paul and Battelle call the banana zone, where prices could skyrocket before eventually crashing. It's not just crypto prices that are affected by changes in global liquidity. Projections indicate that global liquidity growth will peak between fall 2024 and early 2025. This suggests that the most intense phase of the crypto bull market could occur around these dates or shortly after, as the effects permeate the market. Historically, the highest year-on-year changes in global liquidity coincide with Bitcoin's biggest run-ups and crashes. A chart from Willy Woo illustrates that the M2 money supply increases, so does Bitcoin's price. Remarkably, Bitcoin has risen significantly, even though the M2 global supply was contracting until recently. This raises questions about how explosive the price increase could still be and how much potential growth remains. Veteran chartist Peter Brandt provides additional insights. One of his charts compares Bitcoin's price to the total U.S. money stock, which includes currency, demand deposits, and other liquid deposits like savings accounts. M1 has grown significantly in recent years, especially post-COVID with extensive money printing. In terms of M1, Bitcoin has yet to reach an all-time high, but seems poised for a breakout. Brand notes a similarity between this chart and the Dow Jones chart during the stagflation of the 1970s, both displaying giant inverted head and shoulders patterns, which are bullish indicators. The Dow Jones experienced a massive breakout around 1983. These charts suggest that Bitcoin might need to break through its final major resistance area to enter a significant upward phase. Given the current favorable financial conditions, a major move higher seems likely. Red Capital's analysis shows that the monthly time frame, Bitcoin has turned a previous resistance level into support, which reduces the likelihood of a crash below 60K, barring any major macroeconomic disruptions. Zooming out further, Bitcoin is back at the high end of its post-halving reaccumulation range. If Bitcoin can close above this range high, it might trigger a significant upward move, possibly reaching 90K, then 150K, and eventually 215K before the market cycle ends. A weekly close above 71,500 would likely initiate this breakout. This could happen soon, perhaps even by the time you're watching this video. Historically, Bitcoin might not achieve this in just 2 months in post-halving, but the introduction of ETFs could change the game. Past cycles suggest Bitcoin might consolidate between 50 and 60 or even 70K for another 2 or 3 months, aligning with historical patterns. However, this cycle might be different, with potential for an accelerated breakout any day now or a few months down the line. Regardless, the outlook remains bullish, and the key question is when the move will occur. When it does, it is expected to be significant. Let's talk about altcoins, where many believe that real money will be made. Altcoins are primarily driven by retail investors, unlike institutional investors who typically avoid niche tokens like Pepe or Dogecoin. However, retail interest isn't back to 2021 levels yet. For instance, views on crypto YouTube channels are still about 5 times lower than during the 2021 bull market peak. This indicates we're still far from the mania phase, suggesting that a market top is not imminent. Retail investors need more confidence to jump back into altcoins, which could be boosted by better macroeconomic conditions and a decisive new all-time high for Bitcoin and Ethereum. Unfortunately, high prices tend to attract retail investors, often leading them to buy at the wrong time. Despite this, a move to the upside seems likely soon. Pricers have probably consolidated long enough, and while it might take a few more weeks, an upward move appears imminent. A final bullish indicator is that the significant inflow of Bitcoin spot ETFs on June 4th, they saw the second highest daily inflows since their launch, and even Grayscale Bitcoin Trust, despite its high fees, had notable purchases. With Wall Street pouring in $1 billion in one day, it seems likely that we will reach new all-time highs in the near future. The signs are all there if you're looking for them. Thanks for watching.